But overall, everywhere is still very good value in Australia if you get quality, and that really is the key. So a strong year looking forward. One of the key reasons I want to point out to you why I believe that is owner-occupation rates. You can see here we've traditionally been up at around about that 70-odd% owner-occupation rate, but over the years it's been diminishing down. But in the last year or two, with interest rates being so good value, it now is cheaper to own than rent, as I mentioned earlier. What that's meant is that for a lot of people who had the capacity to own but chose for lifestyle reasons to enjoy the money rather than commit, now they're going, wow, well, we can still have our enjoyment and it's still cheaper than renting, so why not commit? And as a result, I think you're going to find that the owner-occupier rates, which had been dropping off, are going to slightly turn and then move back up to higher than they have been for quite a while. I think we're going to go at around about a bottom out of about the 62%, and they're going to sneak back up to 65, 66 very, very fast over an 18-month to 24-month period. That's the key driver of price points. That's what's making things happen. And that's the person you're competing with, not an investor. You're competing with someone who wants to live in that house as much as you do. So, that's a tougher person to beat out at an auction than an investor who's just looking at return. So get your pencil out, sharpen it up, and go to the auction and get your quality property at the price you want. If you look at the rental market, it further validates it. And you can see across Australia, everywhere except Melbourne, the vacancy rate is 3% or less. Now, Melbourne has boomed out to 6.3% vacancy. Why? Because of that student, leaving population. They've all left. The places are too small. They're unlivable. Nobody wants to live there by choice. And as a result, it's seriously hard to get a tenant because the population is not increasing. There's no new person to replace the last person. So expect that to be the case for quite a while. Now, if you look at there in Sydney, 3%, it was 4% last year. So that market's tightening, rapidly. Brisbane has gone down to a 1.3% vacancy from 2.6 the year before. Perth is at 1%, Adelaide 0.7, Canberra 0.7. These are crazy low numbers. And the thing is, there's not much supply coming in, and a lot of the rental property is now being taken out by an owner-occupier buying it. So every time a property gets sold to an owner-occupier, it's no longer available for rent, and it further tightens up the vacancy. So there's a double-edged sword here. It's getting hit from both sides. Now you see in terms of rent increases, Sydney's gone up 6%, on average. Perth, 20% increase. Adelaide, 11% increase. Now some of that is because of the tightness of the market. Some of it is because no one could get any rent rises and had to give discounts during the bad period and also during COVID. So we're seeing a kickback to normality. But, it's still affordable, just rewarding the investor, for holding on during those tough times. And again, when he's got the advantage of both increased rent and lower interest, then that certainly takes the pressure off the investor and helps him because he's also getting uptick in his property value. So it's the holy trifecta from a property investment point of view. You really want to be in the market if you can.